MMT, I need an update on that short as we're up here at the highs. We've made a total of 108 highs and 25 lows, and the time is 8:32 a.m. Pacific Standard Time, 3/15/2012. Monthly option expiration is in play, MMTs. Not only that, we have a wonderful program that we are going to put in our buy and sell script, buying the put option of the 625 at the wholesale bid. The low is 490. No one's lower than the MMT. And remember, this is live, and it's how to get the entries that we talk about. Put those other bids below the market in case we make another series of higher highs. Doesn't look like, if my chart's updating, it looks like we're below. We're up at the top. We know that. Let's take a look in here. Looks like the gauges are moving. Let's see if the brain shows up or not. Calculations are calculating. I'm not getting a signal. But that's the high up here that you take a look at right here at that teeny line because it's still below it. And you want to take a look at the intraday high cycle. Once again, MMT 108. Highs to the resistance. That's that big reversal yesterday, that big double bottom. Here it is right now, that big double bottom. It's right here. This is that broader teeny range bottom that we put in, and we came right back up to the top of that resistance level.
What was your bid?
My bid on these, I'm going to put that bid below. So if he just made another series of higher highs. So let's drop the bid down to $4.20 for now. And let's keep the entry at 3 contract level. So that way the risk is reduced, even though we will be wholesale like we always are. We are always wholesale. Retail was 1060 is where it was. Now it's getting wholesale. They close at 950, and I'm buying below the market. So what am I doing, MMTs? I am removing the dollar cost risk exposure. Dollar cost risk exposure with my wholesale entry. MMT reduces my dollar cost capital risk. And I get to buy. When I'm buying down here, I just took out all of that risk from 1060 down here to our wholesale entries. See them? See the lows? See the discounted price from 950 to 470 MMT? That's what being a market, or I'm sorry, that's what a market maker is here. That's what we do. That's what we do. We make that market. That was the high end of the contract. All right, Brian Plain, you made a series of higher highs. You can go in here and move in on one, put the bid at 470 now. And go ahead and get ready to lock and load and short the intraday high right now at 8:35 a.m. Pacific Standard Time, 3/15/2012. Let it be known, MMT. There it is. You're within pennies. Is he going to do a high frequency bot and break it up to the next resistance level? We all know what that level is, 622.50. Is where it broke down with our short last week, down to the 594 bounce, all the way back up here to 621 now. Nice bull move. Watch your Apple trade. It's still up here. You can see how it's printing. And that short, it's starting to work right here on those contracts. How to buy 317, 625 put, identified by MMT Brian at the lows of the day with a discounted wholesale entry at the lower end of the level that will come into play up toward 111 highs at 621.91 pennies and trading slightly below it within the price channel structure. Here is that intraday high right now, 8:41 a.m. Pacific Standard Time, 3/15/2012. intraday. So as we go into the lunch hour in 19 minutes, we're watching Google very key specifically at its 111 highs up here at that teeny diamond resistance level in the price action. And not only that is that you have to know when to sell into the rallies, and you would be selling out from this breakout of one, two, three teenies. It did not, so from the very bottom, you have to have three and then five, and you're up here, but you can't take out that resistance level, and you're not making a series of higher highs yet. This particular put option, once again, is marked down, and we have bids at $3.80. That's wholesale below the market. That's king wholesale right up there at that resistance level. He would have to break that intraday high. Yes, he would have to break that price high. And it's struggling right here, right now. And it has a 490 by 510, but we're $1 below the market. We also have bids at $4.20 to steal this lower market. It's already locked us there at 470, but how do I scale the lower end of that 317, 625 put? Intraday wholesale price is the thing that I would like for you to understand. The other part of it is the risk. It costs me less money when I am wholesale. My risk is always lower compared to the people that had the puts up here at $10. If they had 10 contracts, that's $10,000. If I have 10 contracts down here, it's $4,700. There's a big difference. There's a big difference. That's the part that we want you to understand. And how do I get that wholesale bid with this kind of top? I'm at 97. I'm at 61. 63 is a high. That was 10.06 teenies. That equaled $5.86 in the MMT platform. And the price spread between the public bid and ask is 16 pennies wide. And here, MMTs, is how this top is in play. And there he goes. He's got a double diamond slightly above it. Now, let's get over here to where that would take us down to the $3.80 wholesale bid entry. At least we're able to do this live and tell you where the orders are going to be before they get there. Now, have you had anyone else do that for you? Probably not. And we know it. However, when we are making markets in the public buy and sell and the ECN high frequency computing volume machines, you have to know how to regulate that price resistance beyond a reasonable doubt. And the reason why I say that is because that's exactly where that resistance level is. And that put option right here is sneaking right back down, and we have to make a series of highs on that price breakout. There he goes to that teeny line. There's that 621.91. Now, let's find out what a teeny range is real quickly. Looks like it's 58 cents per line in the bid and ask. Now that we know that part, 58 cents per teeny, which is the penny price movement. That's 58 pennies right here. That's how accurate that is. Now we're right up at the high end of that teeny line. Here it is. Am I going to break those intraday highs? Remember, MMTs, as we're doing this live, that's going to take us down to that lower dollar risk level entry here and now live at $3.80 bid. That's based on breaking those highs. You're within pennies of the highs. You're within pennies of the highs right now, MMTs. 70 by 85 pennies MMTs. 49, he drops that bid. There's that resistance coming into play. There's that 490 holding that 5 by 510. 490 back to 510. That's 20 penny premium to the SMF MMT wholesale bid at 470 with that reversal going in that direction and identifying price resistance highs with Mr. Plain here and now. And here and now, what it's showing is that it cannot break those intraday highs, you were there at 86 cents over here. Immediately the bids drop down, as you can see, and there's that diamond low, and it's going to weaken in here. So we know what the price script is and how accurate the SMF market maker model is within the price structure. This is how accurate it is. Okay, and that's what's going on right now. And that's this right here. And you need to know that at some point within this 58 penny structure right here, that is exactly 58 cents. That's how accurate it is. Now, the thing about it is when do you turn is that you have to close, the body has to close way down here below the diamond and then it would go right down a teeny and then two teenies right back to where the bottom started right here. So here's your script right here. It's 1, 2, 3 to reversal within the bid and ask structure of 58 pennies between ECNs over here. There's the price spread, okay? And how to square into positions before something happens. It can go either way at this very point in time. However, it's clearly saying that the more that you're at resistance, you can take one contract and scale the bottom. But it's a wide bid and ask, and they just printed through the 47s. So they're buying on the ask. Now let's see if that continues. You can see the prints going up right here. Okay, so 53 is over there now, 29. Look at how wide that is. And here's that reversal down here to test that same range. It's in the same exact pricing script that the MMT uses for this kind of an event. One way or the other, either you're breaking up out of that high or you're going to break this low and you're going to break it miserably as it goes through an intraday price consolidation. There is the bid, there is the ask, this is a special, you're within pennies of the high, and we'll update you later. New enrollees in the MMT school will be clearly instructed throughout the actual live trading day as to what these teeny price resistance levels mean. So this is a very long period of time. It really starts here, 3, 6, 9, there's 12 minutes, there's 15 minutes. Now you're on a new 3, 6, 9, and see the diamond resistance? We're still right there. That's an update right now, 3/15/2012, 8:52 a.m. Pacific Standard Time. Once again, MMT, we're right here. Time, 8:57 a.m. We have not broke that high. We come right up there, MMT, and you can see that red bar and resistance, and you can see the bid and the ask, and we have not broke that high, but here we are. 625 put, monthly expiration, wholesale bid entry, lesson learned, wholesale at reversal, wholesale at reversal. Here you are. The time is 9:01 a.m. Pacific Standard Time. Here's a 3-6, but it's shallow, and there's that 10-minute. And here's that bid and ask, and it went up and it challenged those highs again, MMTs. Once again, live entry right now, and here's that wholesale bid right over here. Learn how to trade that 625 put. Learn how to be a master market maker in the pit. Not your, textbook, I want to trade options stuff doesn't get these low bids. And it doesn't teach you how to take out that risk like this. Dollar risk at that reversal. Once again, I'll move this a little bit more back into the video where you can see that teeny resistance. You can see what the reversal is all about. Once again, 9:02 a.m., 3/15/2012, reversal. One of the things that we're going to conclude is that wholesale bid here on that 625 put that we were patient. We got down here to 380, right to that low. And we haven't, and you can see 380. So we did hold 380. We put in a high of 623.50. We put a total of 161 highs, and the time is 9:56 a.m. Pacific Standard Time, and we went through this hourly trade and showing you how to buy that option down there. It hit that wholesale bid. And the thing about it is pricing the risk. 1060 to 380, 950 was a close. Once again, these are prices that can either go lower, because they can, down to 320. But they are going to hold that initial first price that I gave out in this live video, which was $3.80, I believe, or I could be correct, it could be 360 by 380, somewhere there within the bid and ask structure. We're going to come down and see if this thing wants to take another run. We'll update people later. Once again, understanding calls and puts, and but most importantly is how to buy that wholesale 625 put, and we got to 623.50 on the high and pulled back a couple of dollars and made that low, and you would have to exit the put right now. Take that profit, profits, profits. So that way you're making that dollar spread. Look at those, 490, 490, 490, 490, and they're 450 by 470. The next lower bid, if he comes back up and breaks a high with the monthly time premium, this bid will go at $3.20 on a lower low by 60 pennies if we've come back up and break those intraday highs on Google. Once again, MMTs, it's been very, very nice to see that by being patient, by being disciplined, and by doing everything correctly, always gives you that risk reward entry at wholesale bid, wholesale price.